That's it. And if you are in our members group in Ninja Forex Traders, then watch Paul's intro video, watch that as well in the Financial Freedom group. Make the most of the live trading. There's so much going on at the moment. Absolutely brilliant. I appreciate some of you are still at work or essential workers if you're on the 7-day free trial. But you can watch the recordings, see how we operate. And if you're a member, then come into the im.center where you'll look at academies. I had someone join me yesterday and they immediately started in the Forex 100 series, which was absolutely brilliant. You know, you're going to see success when people just start to plunge in, and even if it does seem a bit overwhelming, you can't find your way around everywhere, just stick with it, because there is a very clear system in our group with all the units and with the schedule of live trading. And we now have an SMS text messaging alert service. I've done 3 or 4 trade alerts out via that service today, so we've got a new service for people, which is absolutely brilliant. So sorry about the dog, I don't know why he's playing up just as I'm getting going. So let's have a look. First of all, what we always do, we follow the same process. We go to Forex Factory and you'll see today, 1st of April, we've got red flag news coming up. Well, just now, I've had several alerts go off. And then at 3 o'clock UK time, I'm on Paris time, so I'm an hour ahead. You've got some more USD dollars. So we avoid trading 1 hour either side of red flag news because the market gets so volatile. Now, at the moment, the market is very fast and very wicky, and you should get used to that as being the new norm because of everything that's going on in the world economy. And often people think of trading as technical. Well, it is technical and it is figures, but behind those figures is the psychology of human beings. So that's what you are seeing reflected in the markets at the moment, and it's been like that for several weeks. And this is because of Brexit and then because of coronavirus. So when you see unemployment figures, for example, on the red flag news, yes, those are actual figures, but behind that is the psychology of what does that mean to people, the unemployment figures going up. Oh, that's not so good. Is my job under threat? Blah, blah, blah. Unemployment figures going down. Oh, great. President Trump's doing a great job. Everyone feels more buoyant. They go out and spend money or buy a bigger house or build a conservatory. So behind all your trading in the market is the psychology of people like you and me in the markets trading. And that's the volatility that you're seeing. So it isn't going to settle down into our old norm anytime soon, because the economic effect of the psychology of the fear of the impact of coronavirus is now working its way through airlines, price of oil, restaurants, horticultural centres. You know, there's this whole swathe of people, the domino effect, and that's what we are seeing reflected in the markets. So I've marked up some pairs, and I thought we'd start by having a look at NZ briefly at NZD. I will look at some USD pairs, but obviously we don't want to trade them at the moment because of 2 lots of red flag news. So NZD CAD, I follow another system called, those are alerts triggering, called 25 to life. And I put this on, no, which one was it I wanted to show you? Euro. Sorry if you can hear a sound in the background. The dog's decided it's a good time to clatter his food bowl around. Euro NZD. So I'll just take off. Oh, the blooming pest. I can't tell him to shut up because then I'll be shouting. I'm just going to get rid of some of the other marks that you don't need to see because there's a bit too much going on. So I just wanted to hide that pitchfork for the moment. There we are. And if I just show you the markup as I sent it out on the text alert service, because obviously I wouldn't put on the pitchforks and things. So I drew the scan off the Harmonic Scanner, which we get free as part of the Platinum package. Go into im.center, log in, look on the left-hand side, and on the menu you will see strategies. and on strategies you'll find the Harmonic Scanner Harmonics, and that brings you to here. And then what we do is Traders Way is the main feed, so we have a look at the H1, and then the new ones are coming up at the top. Now they're called sharks that have come up, and that means that they can bite you. So let's just have a look there. This is the one that I've drawn up. So it did hit stop loss here, but it is coming down, and it had already come down. Well, it hadn't quite. Yes, it had. It had hit entry point 2. So normally we think that that is okay in terms of hi everyone. Just in terms of it being a scan that's strange. Can't seem to mute. Oh, that's it. It's just slow. Can't seem to mute that. Right. Please feel free to ask questions or stay on at the end. Sharon is on at 2 p.m. UK time, so I don't want to overrun. There's quite a few sessions. So Sarah's on after that, going through the basics of BYOB, and then Les at 7, but there is a full schedule in the Ninja group, and we do post alerts for you so that if you're on the 7-day free trial, you can see what we're up to. So it had hit entry point 2 before it came up to stop loss. So I think that's still okay as a scan. And then it's come down. So before we got to this point, I marked it up as a 25 to life, which is a very simple strategy off the D point. But the reason I want to show it to you, so you go to the hourly, that's 15 minutes. Go to the hourly, the same time frame that you have the scan on. Now you can put your setting, it's called a Fibonacci. I've drawn this up for you like this. You can put your setting on your harmonic, but I like to keep my scans, so I do it all on TradingView. You can get a free version of TradingView. So this is these 4 lines, which is that pink in 100, the pale blue, which is a 0.25, the white line, which is 0, and then the minus 75. They're all on here. Let's just bring that up for you. Wrong one. Help if I get the right one, wouldn't it? Fib retracement. So if I just draw that there, I put the settings like that. Now, if this is for a sell, you will need to put one on that's the reverse of that if it is a buy scan, because obviously your green take profit line is going to be the furthest line away from the D point. And if you're in a buy scan coming from the bottom to the top, then clearly your take profit line would be the first line off the D point, the spring point, and that's not going to work at all. Let's just get rid of that one. So you get those settings by I can do it off this actually. If you go over the point and right click, get the drop down, just come to settings at the bottom, that cogwheel, and here is your fib. It's called a fib retracement, and you can see I've ticked and colored the boxes accordingly. So for the sell scan, you just want the 4 settings. You can take a screenshot of that. 5, 4, 3, 2, 1. Okay, so 0, 1, 0.25, 0.25, and then put a dash in minus 0.75, and that's in green. I've got my stop loss in pink, my breakout line, I'll tell you what that is in a minute, in white, and the entry line for a pending order. In this case, we call it sell limit. If it's the other way around on a buy scan, it'd be called a buy limit. And then the green line's the take profit. So you draw the fib on, put the magnet on, start with the, sorry, don't put the magnet on, otherwise it will suck to the wrong areas. Put the 100, get your fib, put your 100 over here and click on it where your D point is, and then drag it down. Now here, you want the 0, and this is the only complicated bit. See if I can get this a bit wider for you. So you're going to look off the D point to either the second candle to the right of your D point, which is that going to be that little blue bullish one, that's a buy candle, or the second candle to the left, which is the furthest away from the D point. And in this case, it's the green one, which is a sell candle. And your 0 is going to be at 50% of that candle, but from wick to wick, which is why it might look slightly, if I zoom in for you, it might look slightly out of sync, but it isn't, because I've drawn it. This is because I've increased the size, so it looks a bit weird. That probably doesn't work doing like that. But I did measure it accurately, and that point there, what I did was take the price at the top of the wick, the price as shown on the right-hand side at the bottom of the wick. I measured it with my ruler, divided it in 2, and I found that price there. So I did do it accurately. So that is the 50% line through that. And the reason you want that is because it's called the banker's candle. They're buying in order to sell, and it's 50% of their order book, which may sound a bit complicated, but we know why that. All you need to know is we know why that works, and this has been thoroughly tested. So if you come across here, what I did was grab something called that blue line, a horizontal ray, which didn't then go across all my lines, but it meant I could mark accurately the line I wanted. So I pulled my 0 down to there. So what you're looking for, and why I think some people said that they didn't get the profit that they wanted, is because what we do is we then set a sell limit at this entry line, the blue line, and that's called a pending order on your MT4 or CTrader platform. And that won't trigger unless certain criteria has been met. And those criteria are that we must have price come down through this breakout line, and then once the body of the candle, sorry, we don't need that one on either. We don't need to see that line. Once the body of the candle has closed through that 0 breakout line, then it retraces, and on the way down, it will trigger that sell limit order. If it doesn't get up, if it doesn't break out and get up that far, it won't trigger, and you won't be put in the trade. And then it'll come down to that take profit one, and indeed it'll go further down, but we're just playing safe here. So what I did was follow the stop loss, which is on that D point, quite a lot of pips, bigger than I usually trade myself. That's 95 pips to make 118, and we know that it's highly unlikely that it will go back up to that stop loss anyway. So why didn't this one quite work? And the reason is because if you look here, only the wick has gone through the breakout point. So that is not a valid, this is not a valid trade for 25 to life, because we needed the body of the candle to close, excuse me, the other side. I haven't got coronavirus. The body, some of the body of the candle to close the other side of that line. And let me show you where I've marked this up, because this is a very, actually, the words may sound complicated. It may seem a bit like, oh my God, what the hell is she going on about? But actually it is a very simple strategy, because I'm just trying to get rid of this stuff. Because once you've done those 4 settings on those on that fib retracement, pulled it from that D point, and then worked out your 50%, the trade does the rest for you. And then you set the pending order, and you will not be put into a trade you don't want to be in if the criteria hasn't been met. But you don't want to be getting into it and putting your sell limit on unless it's broken through the with the body of the candle. And the only other thing you have to remember is if you're in a buy scan from where the D point is going to be at the bottom, then clearly you need to reverse the order of that. But you could set up 2 templates on your trading view, one saying 25 to life sell, and one saying 25 to life. There we are. I just wanted you to see what I've written here, because you might want to take a screenshot of this. Now that line was me doing another strategy. That was an alert line. But here, stop loss line, set sell limit at this line, i.e. pending order, not a market execution. Wait for candle to close the other side of this line. Just some of the body of the candle, doesn't have to be the whole candle, but not just the wick as you've seen here. And then that should take profit one line, and it will automatically work it all out for you. So at the moment, so I'm going to remove all those marks. I just wanted to go through that with you because I'd seen a comment in the Ninja Hub. Someone said it didn't quite work for them, and that's why, because any strategy you use, you've got to print off your checklist and make sure that you're following the rules, particularly when the market is fast moving as the new norm as it is at the moment, and will be like that for quite some time. So bear with me, I'll just clean up some of this chart stuff and put my pitchfork back on, and we can just have a look at it while we're here. So for my confirmations, I've got the 15-minute moving average and the 1-minute one, which is being incredibly slow to load up, and quarter theory, which is an aggressive line of support and resistance. So I'm using pitchforks as trend lines, and sorry if we're switching strategies. This is the strategy I usually trade, which is why if you're on this session, it's an intermediate strategy, different from BYOB and 25 to life. But 25 to life is extremely complementary with my strategy, and it gives you more time to think about the trade, and it's a safe way of trading because it won't trigger that sell limit unless the criteria have been met. But obviously you've got to wait for that breakout zone. So we're looking at a way of putting an alert on that 0 line, because otherwise obviously you've got to kind of keep looking at it to see when is that going to trigger for you. Once it's done that, then you know to set your pending order. Okay, so on this strategy, I've got a sell scan. I look at my chart markups on the 15-minute. It's bounced off quarter theory and the pitchfork. It's broken and retested. It doesn't like it. Price is still above the most current. I'm on the 1-minute. If I come onto the 1-minute chart, let's see if the orange has now moved, because that's the most current trend. Let's see if price is now moving down. And the answer is no, it isn't. It's chugging along. Price will always move back to this 62 line. So at the moment, it's not moving down, but it is going to, I think. Not that I want to over predict the market, because what do we see here? We see not only if we had the break and retest, it did go up to quarter theory there. And that's, what time was that in London? Half past 9, just after half an hour so after opening. So it made quite a big move, over 50 pips back up there. It's made its quite big move down, failed to get to the next level of the pitchfork, made another 50 pip move up. So you could trade this all day long, just between the, I wouldn't ever trade myself quarter theory on its own, but look at how, you've got all day long, sort of nearly 50 pips up there, 50 pips down there, 50 pips up there, 50 pips down there, just using quarter theory and a couple of other things. Hit the pitchfork to the pip, rejected off, now rejected off quarter theory, and it's coming down. So we're a bit late in the trade, because if I had gotten this above the 62, in this market I like to try and get in just when it is the correct side of that 1-minute trend, our current momentum. And it's how many pips have we got between the levels? We have got 100, 98, call it 100, and then you've got 50 pips between each orange section. So I probably would not want to get into it unless it broke and retested off this next level and came down here. So if you want to be looking at it, but I'll tell you the criteria to be met. So you want a break and a retest down like that. So you want the moving average. If you're using BYOB, you can use that I think Kevin's changed it now to a 20 moving average. This is 62. So you want your moving average, you want price below your moving average. And once it's come to the next level, I like to see a break and a retest of 10 pips before it drops to the next level. And then you're looking for it to, if I put on a position for you, short position for a sell, let's put it there, but to only get in after it's done a break and a retest. Now, sometimes, as we know, like here, there's a very quick break and retest there. So it's, and I'm on the 1 minute chart, so it's kind of like flashed you by and you think, oh, what happened there? But usually, you know, it's going to come back up if it fails to get to that level, and then it's going to have another go at wanting to do it. So sometimes price drops like a stone. If it moves very fast, grab your pips, secure the bag and run, because it can equally reverse very quickly on you, particularly in this market. So let's just put some figures on. So we can have, and again, I haven't got a pitchfork helping me here. So I get a bit nervous about that because I like my barriers. I like my quarter theory and my pitchfork to be like up here, to be between me and my stop loss. So it, you know, I know that generally that's going to help keep me safe, keep me in the trade, stop me from being stopped out. So you might want to look at keeping your stop loss, make sure it's above the 62. It depends on your risk to reward ratio, because clearly you want it to come down here. Your next level would be 1.84565. Just write that down. EN 1.84. Oops, did that slip? 575 would be a take profit 1, and that's 40 pips if it goes that far. But let me just point out a qualifying criteria on that. And then you've got to take profit 2. Actually, I'll put this as take profit 3. That last figure, I'm going to say take profit 2, and I'll tell you what I think take profit 1 would be if it carries on like this. So this one, 1.84510, just above quarter theory, but it should go to the 500. Now, what have we got here? Previous lows. So that's higher low, higher low, higher low. What is your current trend telling you? So if it doesn't like these levels, there it only came to there. It could be gradually saying it wants to go back up. So you've got a level here at 1.8475, and that should probably be around about 20 pips. So let me see what that is. So proceed with caution with any of your trades with the market at the moment. And as you know, I tend to do 10 pips to 20. So I'm going to set that at 1.84785, which would be 20 pips. And then keep an eye on it here at about 10 pips. So that works with the ratios I usually work to. And if you see it stalling out, reversing on you, just grab your money and go. And there's no point really, because the other way we work is we work to previous highs, but there wouldn't be any. And what you're really doing here is taking what we've talked about before, which is a quarter theory trade. But there wouldn't be any point in making your stop loss bigger. You could move it so it's above the 62, but you're going to get such a big stop loss compared to the pips you think you're going to get. That's why ideally I don't like to take these kind of trades. I like to have it off the pitchfork and the quarter theory. These trades do make me a bit more nervous. So please exercise judgment, make sure you stick to the rules. And I was going to show you EuroCAD to show you something else I've marked up in line with what we've been talking about. Did I keep it marked up? I might have taken it off. I wanted to make the point about this trade yesterday, EuroCAD, which we talked about as a sell. And can you just excuse me? There's someone at the door. Go keep. It's probably the postman. What, back in a tick. Right, sorry guys, it's live trading for you. Door-to-door stuff from the mayor. Right, we talked about this as a sell yesterday. So that would have been at round about here where it was stalling out. So what I said was, I'm on the 15-minute chart, it had broken and retested, and it was stalling out on quarter theory, and it was under the 62. So I thought it would hold that and carry on its merry way down. That's gone back up there because it hasn't actually crossed on the 1 minute. In fact, that's a very good point. It only crossed very slightly back here. It wasn't a big cross. So there's a strong pressure on it that it did want to carry on going up. Now, it didn't then sell. It shot up nearly 100 pips. And someone said, you know, that it had gone horribly wrong for them. So we did have a chat about it on Messenger, and I did say to them, now remember, let's have a look on the 1 minute. I'm always entering on the 1 minute because that's your current momentum in the market. Even if you don't enter on the 1 minute according to your strategy, I recommend you have a look at the 1 minute. Now it is very wrinkly. There's a lot of ups and downs, and it's like looking at the palm of your hand, as I always say, close up, you see all the wrinkles. But it does tell you the current movement of price. And that's why I like it. So if we look at where it made that move back here, right up, whilst we were talking about getting into the trade, there's a key, very, very key thing that happens here. So we've talked about it breaking and retesting. I'm sorry, quarter theory isn't showing up. It's just glitching on me because I've come down to the 1 minute. But that isn't the point. It's not quarter theory. So there's the pitchfork, and then it shoots up, goes horribly wrong for someone for nearly 100 pips. Why would I have not got into that? That's just after we were finishing, because we went on to look for some other pairs, and I didn't come back to this right at the end. Absolutely key reason why I would never ever have got into this for a sell. And number one, I said we're coming up to the hour, and do not take trades in the 10 minutes before the end of the first hour's candle, particularly in the opening of London. And do not take it for 5 or 10 minutes after the hour. That's because that's where they do all the fake outs. So the orange crosses above the blue line. The 1 minute EMA comes above the line, which says, I am buying. And there's your buy. I am buying. So number one, you've got the hour, and number two, you've got the orange cross above on the hour as well. So no way do you want to be getting into a sell trade at that point. And then I need to come out of that brush mark which I have to do in a quirky way round because I can't seem to ever get rid of it otherwise. So then with this particular one, we've got, it crosses back down. Good. Check number 1 for a sell. We've got a nice break and retest off the pitchfork. Check number 2 for a sell. And if quarter theory would load up, have I got 3 confirmations to get into this for 20 pips for a sell? And if quarter theory would load up, and I don't know why it isn't. Try and switch it on and off to see if that helps. You come back to the 15-minute then, because you get, you get the idea. And this is another reason I like to go just for 10 to 20, and I go for that 10 to 20 off the strongest position that I can, which will be a reversal off a pitchfork or a break and a retest or breakthrough, a 62 crossing like that, because all these things help give you the best chance of success on your trade. So I just want to load quarter theory. You wouldn't think the system would find it too difficult. Come on, 15 minutes, it should load on. There we are. So at the moment, we haven't got the orange cross below the blue. We have got it still under quarter theory, and price still wants to come down. So it is not, and in fact, I put an alert on there. So it's made some quite wild moves at the moment. So not a trade for me at all because of this triangle. And I wanted to be looking at it. I put that line there. So I don't want to look at this until it's moved along and I'm under quarter theory and the pitchfork. So that's Euro CAD. I mean, I do like Euro CAD as a pair, but it's very, very wild in the market at the moment. I don't know what the effect of that red flag Euro news is. We'll have a look at the pair in a minute. So back on the, I'll take my alert off, so I'm not going to get into anything on this at the moment. Remove that. And let's just measure the pips where we are. So personally speaking, the next area really that I would want to be entering this, because it isn't, I don't generally like those quarter theory trades all the time. That's 55 pips. Probably get in here after it's come down, if it's going to carry on to that level. So we're quite some way off it getting to this level. That's the kind of trade I'd be looking at, but not if it starts to pinch into this point here. Now what we can do as well is see if price is going to come up like this. This might be a better point to put an alert on. So because the 62 is still above the blue, so if it comes up here, that's sorry, that's a bit too big a break, but that's the sort of thing down to there that we want. So wait, in fact, I think I like this better. So I'm going to put, and I'll give you the figures. Put, and if it doesn't do this, then I don't care. Just means there's loads of other pairs to look at, but it means I only want to look at this if the market, this is why you have to be patient with trading and set alerts, because you don't want to sit here and stare at price the whole time. You want to be watching Netflix or going off cooking some lunch or whatever you want to do. And I always put my alerts, I always put everything in the same color for the same thing. Then my little brain doesn't get confused. So my alerts are always in that pale green color. So there's the alert set, and the orange is still above the blue. It is forming higher lows at the moment. So, but we know we're in a sell scan. My trend lines, I always like the 1 minute trend because that's one of my criteria, a break and a retest of the 1 minute trend. Trend lines are more of a zone. I personally don't mind if I've got a few little wicks through. Pitchforks are aggressive trend lines. They are very accurate to the pip, but trend lines are a bit more of a zone area. Please feel free to ask questions if anyone wants to. You're very welcome. Just come back to that. So the figures would be, put a short position on. So it's already done the breaking and the retesting, but at the moment price is playing with us between the 1 minute and the 15 minute. Can you see how it's respected, come down, tested the 15 minute, it's trying to push down, it's pinching, it's coming up to the 62. It might not make it back up to the pitchfork, you know, I don't know, but at this moment in time, that's the place I would prefer to take the trade. So 10 pip stop loss, and then you've got about 25 pips there. So there's your 10 to 20. And let me look at the settings, put some figures in. Entry price, call it 775. So the Euro CAD 1.55775. Profit level, I'm going to put at 20 because I don't know if it's going to wick out or anything. So that would be profit at 1.55575. But what I do is I move my, you know, I don't close the trade, I do a market execution. I move my stop loss to stop profit to 1 pip as soon as it's hit 10 pips. Then if it reverses on me, I haven't lost. But sometimes the market this morning, you know, it's been, yesterday was quite a lot. I thought of just sidling along, and today it seems to be going a bit wild. And a stop loss of 1100. Sitting that for several years. I did that. So stop loss of 1.5588. That figure there just works it out for you. And that's what I love about the tools we use. You know, I just click buttons and think. It's the understanding, isn't it? Because what we're looking for here is that you do want price to get below that 62 and start to see it come down. Now, it may just come straight down, but that I haven't then, you know, I've had the break and the retest. If the 62 crosses like it has here, how many pips was that? Just to that. That's only 5 pips, so it did cross. And then at quarter theory, it said, okay, I'm going to bash on through. So that would have been a good trade down to that pitchfork there. So you're looking for something similar. So that would have been, so number one, a 62 crossing. I haven't got the pitchfork cross down here, but I've got a break and a retest. Look at that, all the way down and all the way up. It gave you a second option to get in the trade. So there's your break and retest you could have got in there. So that's two confirmations. And I'll just draw a 1 minute trend line on, and then you would have got, say you've come down to there, you would have got your 20 round about the pitchfork level. Very hard to get the full 100% of any move. You can see it wicks out. So there was 25 pips down there, but quite frankly, if you've got in there with a 10 pip stop loss and down to very quickly it moved down to that 20, I would have just closed my trade and been very happy with that result because of the speeds of the market at the moment. So the other thing that you can do is put your 1 minute trend line on, and if you look, there's that trend there, so you can see it does stay underneath. And having spoken about keeping everything in the same color, make it a bit wider, or you could, I think I probably like it there. These are my trend lines, so technically I need those. They're not alert lines. And again, nice little trade. As you can see, it's under the 62. It stays underneath. But here, it breaks above, you're thinking, I need, you know, either price has reversed right back on you and you've given away all your profit. So you should have been, as soon as you see it bouncing off one of your levels, you need to be thinking, whenever you get in a trade, where are you going to get out of it? So then it comes up, and as you can see, it just busts straight through all the way up. And I can't see what time. Yes, there we are. That's on the hour. So that is your 11 o'clock in the UK, end of hour candle. And that one is, that's at 1 o'clock to 1:15 my time. So that's noon your time, just coming up to the end of London. And it does another big move down, rejects off that 15-minute EMA there. So, and then it started to play, and now it's doing nothing at the moment. So that's kind of how I view a chart and what's happening on EuroCAD at the moment. I've written down some more here. Because as I say, I don't particularly want to, Euro GBP, that's a London pair. It's quite slow moving. And I think this one, I put this here to talk to you about because I've drawn this up, but if you look on here, the D point has moved. So how do you make decisions like that? Do you just say to yourself, well, I won't draw it, or it's no good? And in fact, I think it's redrawn itself before, I think it was Euro GBP. So let me just make a note of, can't see you now, but let me make a note of what that new time is. 31st of the 3rd at 17. 31st the 3rd at 1700. Yes, it moved down. It's moved down there. So, but when I looked at it before I came on to talk to you guys, it hadn't redrawn itself on the harmonic scanner. It was still at that point. And I left it on here because sometimes I get questions from people saying, do I move the D point? The D point's redrawn. What's happened to my trade? Well, the answer is mostly, you know, do check it on the scanner when it does redraw itself, because sometimes scans do disappear. But I just take it, you know, that the pitchfork's the important thing if you are going to use pitchforks. And it's because it's very, there we are. So I just move it myself. It's just slipped a bit because it's next to that quarter theory. And you can move the shape down, but the shape, especially if it's going to confuse you, but the shape is there just to show you the shape. It's not not anything other than that. So there you are. And then I would advise coming to the 1 minute if you're trying to get the more precise entries, so that you can, it look like it's on. Let's see what it looks like here. That's absolutely fine. And then come down to your object box and lock it on again. And then things can't glitch on you. So we'll stay down on the 1 minute. So it still looks like it wants to push down further. So it doesn't even like that at its lowest level at the moment. So whether it'll redraw again, I don't know. So that means I probably wouldn't take a trade off this at the moment. What's it got going for it? It's a new scan. It's now done its break and retest, but price is still pushing down. Put quarter theory on, see if it's busting through that. So it's in the middle, it's under the 62. So it'll probably will come down now, because price always moves between levels. I know we've seen, if it fails to reach that next level, like, have we got one here? So it came up here, it's quite far away, but you know, for the purposes of explanation, it failed to reach that level, therefore it will drop, it will go back to its previous level. So here, to the pip it touched quarter theory, rejected off, it's busted through, it's under the 62, so that's acting, pushing like a hand, pushing price down. So its next level to come to is 0.88000. So no trade that I would advise taking on Euro GBP for those reasons until it decides it's going to turn into the scan, unless the scan decides it's failed. And but you know, if it comes right down to the stop loss area, then yes, it is a failed scan. It hasn't done that yet. It's saying entry at 0, because you can just take this trade here, 0.88089. Let's just have a look where that is, where price is at the moment. Should have written that down, shouldn't I? In one ear, out the other. 0.88089. Let's mark that up for you. Oh, I've just realised Sharon's on now. Don't want to hold Sharon up. 0.89. So actually, it's giving us that figure there down at that level anyway. Oh, that just glitched on me. Just pull that down. So that's your entry point round about that quarter theory anyway. That's what the scanner's saying. So it was the opposite, expecting it to come down further. But if it gets to that level, in my opinion, it'll probably want to hit that level before it turns. And often when you see these things, I like to look at the GBP pair, because this is saying the euro is selling against the Great British pound. So often, particularly as I'm in France, I've got bank accounts in France and England, I've got a vested interest. I like to look at the GBP pair and see what that's doing as a correlating pair, to see, you know, is GBP going up? Doesn't always work that way. That's against the Japanese yen. There you are, that's going down. GBP also is the euro going down against the Japanese yen. I've set an alert up there. That'll be according to where the scan is. And then we'll just finish on this one. One other GBP against Canadian dollar. Is that rising or falling? Take off quarters theory. Well, it's just sidling along, not doing very much at all at the moment. So that's everything from me for today. I don't know if anyone's got any questions. Please feel free to ask if you have. Otherwise, we can head over to Sharon's session. Then Sarah's on with the BYOB basics. I think that's at 3 p.m. UK time, and then Les on at 7. Okay, everyone.
Thanks very much, Sarah.
Yeah, you're very welcome. So have a good rest of your day.
Thanks, you too.
Okay, bye.
Bye.